Hi everyone, welcome to the channel. Today our focus is going to be on the company Lockheed Martin, one of the major defense contractors and a company I own. In this video, we'll take a quick minute to look at their financials, perform a stock valuation, then we'll look at my purchases into Lockheed, and at the end of the video, we'll look at my portfolio's performance. So let's jump right into it. So starting off at the top with revenue, pretty much consistent growth since 2014, with the only down year being back in 2022. And overall, it's up nearly 70% over the decade. Next, we have net income, and that's nearly doubling from 3.6 billion to 6.9 billion over the past 10 years, while earnings per share has increased almost 150%, from $11.21 to $27.55. And next, we have two data points I really like looking at, and the first being dividends, which I like seeing growing over time. And Lockheed has been achieving this with the dividends up nearly 120% since 2014. Then shares, which I like seeing on the decline, which they have been repurchasing more than 70 million over the last 10 years. So, two great data signs there, along with the growth we saw in the first two data points. Then free cash flow. They are a money generating company, particularly over the last 4 years. Looks like they've generated over 6 billion in cash each of those years. And 2019 was just slightly below that at 5.8 billion. And overall, since 2014, it is up more than 100%. So overall, I think these are great financial data points here for Lockheed. But let's jump down and we'll perform the stock valuation next. Here's the valuation setup, and we'll look at making a modification in a moment. And if you get any useful information, I ask you to consider liking and subscribing to the channel. But for the intrinsic value, I come up with $461.26, and with a 90% margin of safety, it brings that down to $415.13. And this is based on a 9% short-term growth rate over the next 10 years with a 10% discount rate, and I am using a 3% long-term growth rate. Now, up here in the top right, we see net income CAGR for the last 10 years at 7.48%, while earnings per share CAGR at 10.51. So when I take the average of these two numbers, that comes up to 9%. So this is where I'm getting my 9% short-term growth rate, is from those two data points there. Now, with my intrinsic value of $461.26, the market is currently trading the stock in that mid $450 range, maybe $455, give or take. So slightly below the intrinsic value, but not much of a margin of safety. And again, this is based on a 9% short-term growth rate. Now, I do know Lockheed got a big contract for developing the next interceptor missile. So that's about $17 billion. Not sure how that's really going to be impacting the stock. Stock hasn't moved too much since that notice, and they do have their next earnings call in about a week or so. So we'll get some good guidance there. But let's just say it's a little more optimistic outlook, and we're going to change that 9% to a 10% short-term growth rate and see how that impacts the valuation. So with a 10% short-term growth rate, intrinsic value jumps up to just below $500, and with a 90% margin of safety, it brings it to $449.57. So slightly below where it's currently trading. So if you're a little more optimistic and you believe that maybe a 10% short-term growth rate is more realistic, that might be a good opportunity to buy in. But let's just change that one more time, and we'll look at an 8% short-term growth rate and see how that impacts the valuation. With an 8% short-term growth rate, intrinsic value drops to $426, which is probably about 5% below from where it's currently trading today. Though for me, I think that 9% short-term growth rate we had originally is probably the most realistic, and that's what I would use to judge the company. And at the current stock price at $455, it doesn't give as much of a margin of safety that I would like. So I'd probably hold off buying any more shares and look to see if the stock price drops, maybe getting into that 440 or possibly slightly lower price range. But let's move on and look at a few other data points. First, PE ratio 16.56, so not too crazy, though this is probably typically in that range where Lockheed normally trades, sometimes a little higher, sometimes a little lower. So that's why I would want to see that stock price to drop a little bit to buy in, because this is probably right at the average where it normally trades. And I like to get buy in at a little lower of a price, therefore a little bit lower of a PE ratio for Lockheed. Then long-term debt to free cash flow, I like seeing 3 or under. We can see they're clearly under that, 2.78. And then during our financials, we noticed that dividends have been increasing. You see here, have increased more than 120% over the last 10 years. So great sign there. And their current dividend gives them a 2.8% yield, which is probably a little bit more than what an S&P 500 ETF dividend yield would be. And then shares, we know they've been repurchasing them, and over the last 10 years, down more than 22%. So another great sign there. I like to see that. And then net profit margin, I like typically seeing 10% or higher. We can see they're slightly below that for the last 10 years, 9.14, and the last 3 years, 9.45. So still, I think it's a good data sign, just slightly below that 10%. And one other data point I really like looking at is return on invested capital. Very important for an investor to see how management's using the capital on hand. I like seeing 10% or higher. We could see they're clearly over that, in that high 20% range, even in 30% range, which I wasn't expecting for Lockheed, but great sign there. And one of the reasons why I am considering holding the stock, not selling out, if I know management can invest the money wisely to return value to shareholders. But let's move on now and look at my purchases into Lockheed. Here are all my buy-ins into Lockheed, which were made back in November 2021, around $330. I remember buying in back then because the stock price dropped following an earnings call, and I felt the market overreacted. It was a great opportunity to buy in, which it has been. And since then, the stock price has gone up just over 38%. While if I put my money into the S&P 500 back then, I would be up about 7.5%. And with dividends, Lockheed has returned 47%, while if I invested in the S&P 500 with dividends, I'd be up 10.7%. So this investment has definitely outperformed the market, and I have a cost basis of $330.17. And down below is my overall investment into Lockheed. So my investment's about 25,000, and with the stock gains, that's up to just below 32,000. So as I said, it definitely has given me a good return, especially when I compare it to the S&P 500. But let's move on now and look at the portfolio's performance next. So here's the portfolio's overall performance. And for this week of April 14th, it's been a down week. And actually last week, I believe it's when the sell-off started happening. But we can see Lockheed here in that center right, one of the green ones. And I'll point out a few other ones. So Tesla, I'm going to be selling out of that position. It hasn't performed too well for me since buying in a few months ago. And I also think there's going to be some more sell-off next week when they do their first quarter one earnings call. So I wouldn't be surprised if it gets below 140s, currently trading in high 140s. So maybe even possibly getting below 130 in another month or so if things don't start improving. NVIDIA has sold off too over the past week, and I am going to buy some more shares of NVIDIA. And Palantir, that has sold off too, and I bought some more shares in that low $20 range. So I'm happy to see that. I want to buy more Palantir at lower prices. But hope you enjoyed this video, got some useful information. If so, consider subscribing. Hope to see you next time. Thanks for watching.